So along with the patterns, you also have to master price action because price action trumps all.
So, Mitch, if you don't mind, could you reiterate what price action? What is it?
What is price action?
Yeah. What,
Yeah, it's the pricing is the bars moving one direction or the other,
mm-hmm.
and whether there's any stalls.
Okay.
If we're to look on this chart, what we're doing is basically saying, okay, we're picking out locations that price action kind of gets stuck at. And we can see it very clearly here. This is almost the top of the opening range right here. Mm-hmm. If I were to turn that on, you'll see it.
Yeah.
But on this chart, because I don't have any, I'm just looking at price action and what's being drawn out.
Mm-hmm.
This is my go-to chart when I'm doing a trade.
So when you're looking at price action, it's the support and resistance lines that you're mainly looking at, right?
That's correct, and the patterns themselves.
Okay.
Okay. So, for example, on this chart, this might be another target, right? And there might be another stall area here.
Mm-hmm.
Right? Because what we're doing is we're just following the wicks
mm-hmm.
out to the left and pulling them to the right.
So how do you handle these stall areas? You see if there's a bounce off the stall area?
Yeah, so the stall areas are really profit-taking areas.
Okay.
Right? So when they come down, unless they slam right through the stall areas,
mm-hmm.
you want to plan on taking some profit as into that area of stall.
Mm-hmm.
Right? So if you had, let's say you had 10 contracts, you might want to take 6 or 7 of them off.
Mm-hmm.
Right? Another way of looking at it, you could say, well, what I'm looking for in this particular case, for whatever reason, I'm looking for 50% profit.
Mm-hmm.
So if you bought it for, let's say, $3, right, you'd be looking for $1.50.
Mm-hmm.
Right?
Yeah.
And let's say you have 10 contracts and you sold 7 of them. Well, 7 times $1.50 is how much?
$10.50.
I'm sorry?
$10.50?
Yeah, it's $1,050. Mm-hmm. And if you paid $3 a contract times 10.
On $7.50 profit.
Yes. Right? And if you left the last 3 to run,
mm-hmm.
got all the way down to your target.
Yeah.
Which in this case is $7.66 to target. That would translate to about $5, just under $5 a share. Say it's $4.50 a share to $5 a share. So at $5 times 3, now you're looking at profit, let's say $3 times 3 is another $900,
Yeah. Mm-hmm.
right? But what you're doing is you're taking your original capital and putting it back in your bank account. And at the end of the day, that same $5 move can be worth $10 a contract, $10 a share, because of the way that it explodes.
Does this also happen for options on shares? That is at
Oh, yeah.
the expire in the money.
Yep. But options, share options, don't typically have daily expirations. They typically have weekly expirations.
Okay.
So it becomes more of a swing trade.
Okay. Uh-huh.